Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York on Friday. Happy Aloha Friday as we say on the islands, 3rd day of July 2015, and this is the daily report for gold and silver, our weekend review, a short edition in that we are on holiday hours, half a day in terms of the market. Quiet activity. Gold did close higher, up about $4 on the day, 1167.80. That's with a low of 63.70 and a high of 69.30. Also seeing a little upside pop in silver, up approximately 9 cents on the day, 1565, low 56.5. High 68.50. So traders, as we go into this weekend, of course, tomorrow Independence Day here in the United States, and on Sunday in Greece, there is a scheduled referendum vote in which, in essence, they're voting to either accept or not accept the current austerity measures that are being proposed as a condition to get more funding or loans to bail them out of their current debt crisis. Now, in terms of our current view on gold, I do believe at this point that we have hit a interim bottom in the market. The intraday low yesterday at 1155, I believe, washed out the last of that market moving down. And at this point, I also believe that we are in a traditional sort of a correction, whether that unfolds as an ABC or some other configuration of that. That is our current take on the market. And so when we look at this market, what we're looking at is this fourth wave down, third, this of course is wave 2, 3, and so it is my current take on the market that we've just completed a fifth out of fifth, meaning we have completed this move down once we hit this intraday low. And it is my sense that at this point we should move into some sort of an A, B, C configuration. Short-term chart, 4-hour chart, we do have confirmation on our stochastics, we have confirmation on our moving average. Yet another way to look at this current move, this is a Japanese average chart, half-a-day candles. And if we look at our wave count, 1, 2, this is our third wave down, fourth wave, of course, and then our fifth wave here. We also have a set of channel lines, and this shows you our downward track that we have exhibited as we completed this final fifth wave down. And within that, of course, we also had a sub count, 1, 2, 3, 4, and 5. So as I said, it does appear, I believe, that we are at 5 out of 5. I did make a recommendation to enter the market yesterday. Traders that took that call are in at roughly 64 in the market. And I do believe in terms of upside potential, the initial point of exit, my target, is roughly, call it 1187. And traders, of course, when we look at our daily chart, this is standard candlestick format. Of course, we're going to, in essence, have that same count, although we're laying out a little bit differently because we will have our sub count, our minor, as well as our intermediate in there, and that's what we're looking at right in here. But as you can see here, we're also at 5 out of 5. My recommendation, of course, is to maintain our long position and current stop over the weekend, and I really believe that depending on what happens in Greece, could greatly influence gold, and my sense is that it will be a tough read to have them come to some sort of an immediate understanding or agreement. Because of that, I think we will see an upside bounce in the precious metals, also an upside bounce in the US dollar, and the euro dollar showing some weakness. So traders, as far as silver goes, our count is a little bit different. Our current count shows us that we have probably just completed a third wave. So here we have got 5 out of 5. We're in our third wave down and are probably moving into that counter fourth wave here. That fourth wave could take us as high as, call it 1610. That would be followed by a fifth wave down. But we are not recommending that we enter the market in silver. We will take a look at it beginning of next week. But for the weekend, maintain our long gold position, sideline on silver. This has been Gary Wagner, wishing you as always good trading and wishing you a great Independence Day and 4th of July. Bye-bye.